Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, including news the Australia-China Free Trade Agreement talks may falter at the finish line. But first, the ECB reported on its October meeting early this morning. They said a plan to begin buying private sector assets this month should have a significant impact on the Eurozone economy, but it left open questions about how big the program would be. They're targeting a pool of €1 trillion of securities tied to bank loans known as asset-backed securities and covered bonds. Analysts expect them to buy about €200 billion worth, but are doubting whether that will be enough to revive bank lending and prevent the Eurozone from slipping back into recession. The Eurocentric IMF is warning that we are entering a new mediocre era of low growth for a long time, along with heightened risks. Christine Lagarde made the warning as she signalled cuts to the IMF global outlook for 2015. In Australia, it looks increasingly likely that they may not end up with their own free trade agreement with China. Unless there are major concessions on farm products, the Aussies may walk away from these negotiations, according to reports. If that turns out to be the case, New Zealand's well-entrenched deal with China will become a lasting advantage. In China, they may have a big trade surplus in goods, but we should also note they run a large deficit in services. In August, they had a $21 billion services deficit, and that compares with their $49 billion trade surplus. In the US, new orders for American factory goods posted their biggest decline on record in August, payback for an aircraft-driven jump in July. Excluding that impact, the data was unchanged. On Wall Street, stocks have moved back into positive territory, although markets are now awaiting tomorrow's American non-farm payrolls data release. The precursor ADP series suggests it could be quite good this time. In fact, the number of Americans filing new claims for unemployment benefits unexpectedly fell last week, a sign their labour market may be tightening. More impressive is to look past the seasonally adjusted data. These jobless numbers are falling very quickly. US Treasury 10-year yields have slipped slightly again today to 2.42%, reflecting the Eurozone concerns. New Zealand swap rates start today at their lowest level since November 2013. And the oil price fell again and is now under $91 a barrel. At one stage overnight, it was below $90, with the Brent benchmark price now under $93 a barrel. The Saudis have decided to defend their market share against Iraq and Iran, and Nigerian oil that used to go to the US needs to find new buyers now that surging US output has made them an exporter. Russia is awash in oil too. Supply is overwhelming the slowing growth in demand. Gold had a small fall, now at $1,213 an ounce. We start today with our currency still unmoved by the dairy auction. In fact, if anything, there's a bit of a rebound going on. New Zealand dollar is now up to 78.8 US cents. That's a rise of almost 1 cent overnight. It's at 89.6 Aussie cents, and the TWI is at 76.7. Markets certainly are looking past the dairy prices. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.